I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA's Daily Review. Today is January 3rd, Wednesday, 2024. Welcome to the new year. Hope you had a good holiday. And I'm just coming back a little early just to kind of, touch basis on the market. This is the level that we did. The last video that we did, I believe, was December, I want to say 13th, I believe. And I put this level here, which was 17,031 and 3/4, right? Which was the range projected for one standard deviation for this swing up and this swing. They matched. And we ended up getting that, but obviously they did need to do a stop rate, and then we came down from there for a beautiful level. And I'm coming back to see this, and let's kind of hop right into it here, and just start slowly to ease in. And not saying I'm fully back, but the hiatus was definitely needed. And to be honest, I'll be honest with you. The biggest takeaway that I got out of this hiatus, which is being away from the market for this long, was that I could see things clearly. The patience level is so key. Your trading will do a 360 or 180 or whatever if you have patience. You let trades come to you. You miss trades on purpose. And I'm telling you, watching price is so key, that you'll just get into a different mode with yourself in your trading. Be more comfortable. You're not thirsty, constantly trying to overtrade. I mean, you notice that in your trading, if you're struggling, that you'll have over trades. You'll constantly try to catch a trade that you think you're right at, and you're right. It will go your way, but you're constantly getting rated, but to the point where the amount of losses that you took by the time you do catch the trade, it's like a wash, right? So I'll be honest with you that it's been a while since I've spent that much time away from the chart, to the point where when I came back to it, I mean, it was just I was so comfortable. I wasn't worried. I wasn't, over trading, so sort of speak. You're waiting for the quality setups, and I'm telling you, man, right now, that'll just change your game. Anyways, so let me go to the higher time frame here. So we had that level here of, I said 17,031. So that's going to be sitting right here. So if that was on the other chart. I'm going to just do it on this chart here so you can see. And let's just randomly put it at where we were. 1 second. I believe that's what it was. Yeah. All right. So when we projected that level, look at the reaction here. So where was the 13th? It was here. So after that big move day right there, right? Next day, the Thursday, that's when I went on my honeymoon. We sank all the way back down, came right back into that down block, right? So that's a support right there. Nice demand block right there. And then price shot up, right? So it took out all that imbalance, had that little gap right there, shot up right to that level, 1031. Now this is December 20th. Obviously, you know all this, but it's good to see this. So you'll see that we played around in there. We had a nice sell there. I believe that was news. December 20th, Wednesday, 23. We shot all the way down, came back down, and we did not take out that low right there. So just creating and engineering a liquidity pool. And then we came back up. Sold off again right here, came back up, rated, went obviously higher than I mentioned, right? For 1, 2, 3 days. On the 4th day, we came down and we closed right there, right? And then Sunday opened, which is, we were talking, well, not Sunday, that was New Year's. But when we started this week, we peaked up at that 731 level. Look at that. Look at that. Look how we hit that. You can see that, obviously, right? A couple times there, gapped, boom, sank down on Monday, and we've been down since. So this is to show you that this level, even when we project it, it's not over. It's not like just because we passed it doesn't mean that level isn't important or will be referenced later. Doesn't mean it's over, right? This liquidity pool got rated, came back, but that level is still key in the big picture of what we were just discussing here. So as you can see it here, look at the bodies. Look at that. Look at that, respecting beautifully right there. All right, and then look how well that's this chart, but beautifully respecting there, and then that's that Tuesday popped up. All right, and then sold off. So I'll get into the rest in a second, but and then let me just show you just this trade. I couldn't screenshot and do the other trade. I was in the zone, kind of like new into this, back into this, getting feeling for it. But so you'll see here that as we opened up here, you can see right short of that opening gap. But this is the fake swing. This is your accumulation and manipulation up and your distribution down. So the big picture here was that we were hunting this low here, obviously. So came down, took out that low, took all the liquidity and on the higher lows and all the buyers buying, right? And then we did that yesterday, right? So we reached that. You see how we reached that nicely and then popped up. All right, so we opened up here, and this is sort of speak of a resistance. It's not really a good one in my opinion, but this is just pretty much making a lower high here. And then we were rushing down the rest of the whole day of the AM and came down and came into this 4-hour imbalance here. On the daily chart, you could see it's that candle there. And we did pretty much stop at 50%. So I'm going to do this live for you here so you can get the gist. All right. And then just eyeballing, you can see very close to that 50%, right? So these tools are being used, right? And then also on the weekly chart, as you can see, we got this massive imbalance on that candle, right? So, and then hitting this level here, might as well just do that here now. Where is it? Yeah, I've been away for a while. Right there. Let's just do that right there. So I'm definitely understanding that we should be rushing to this level here. Plus that liquidity there, right there, right? And that breakout from here, which we did retest, which is fine, but definitely a lot of liquidity built off of that breakout, which is what's used for breakout artists and trading. And then that high that we are discussing here, which is July 20th. So that July 20th, that's a good, nice support and a lot of liquidity here. And we have a lot of balancing to do, obviously, after we've been rushing for that fourth quarter of last year's big epic run, right? But I don't know if I want to stop the video here and let you know, like, I don't believe this for a minute. In a perfect world, I'm getting sidetracked. I'm sorry. I'll come right back to that point. I just want to discuss today. Today, and yesterday, to be honest with you, was beautiful. I thought it was so easy. I don't know. It's because if it's my hiatus, or it's because that I took, or is it because I'm getting better? This was so easy for me today. I couldn't believe how easy it was today. And I'm not trying to say that to impress you. I'm being honest. That hiatus did really well, but also this indicator, again, I don't like to teach indicators and I'm not telling you to rely on it, but it was so gorgeous today on the indicator on the 1 minute. I was just like, man, I can't miss with this. But I mean, we're using the indicator for overbought and oversold. If I didn't have the indicator, I don't need it. I mean, I know that these extreme levels of lower lows and lower highs, I know they're reaching. overbought and oversold areas. It doesn't look well on this 5 minute, so I'm going to come down to a 1 minute. That's pretty much this analysis today was all done on that. So I'll try to back up just a little bit here and try to show you. So I was ready at 8 p.m. today, literally on purpose, and came right into a beautiful trade. So this trade right here at 8 o'clock right here, 8:02 specifically. Let me try to open up a little bit for you, and then I'll show you the trade. But right, you'll see here that, we had these drives down, right? And keep in mind, we've already taken out that low, right? So when we're coming down, I'm obviously looking, I'm not looking to hold trades, but I'm understanding that this liquidity here is to be met. But and I didn't even need it. I decided to stop because we did have news at 10 o'clock and we did have news at 2 o'clock. So because of that, and this is explaining why I started at 8 o'clock and wanted to be on the ready at 8 o'clock on the head. Because 8 o'clock, you'll see a lot of nice moves. And when I'm ready at 8 o'clock here, I got this divergence happening here, right? I'm already on the oversold area. I have liquidity rated, right? And then I also understand now going to this 15 minute, this is how I got the trade. I have this is all this price action to the right hasn't existed yet. Okay. So we're just right here. Okay. And then we have this 15 minute imbalance right there with its up candle right there. Okay. So that was framing this trade. So I'm not waiting for any confirmation here. I didn't wait at all for this imbalance. I was that confident. Let me open this up. I was that confident and just pushing the button literally here. I got filled. I ended up getting filled right here, actually. So no confirmation, nothing. Yeah, this did take out that swing high and came back. And then you have this nice imbalance plus this inversion imbalance, which is holding price as support. But let me tell you something. I didn't even wait for that. I pushed it as soon as I got. I also got it on a 30-second chart that I was looking at. But just the momentum and the time of the day, which is very key when you combine these two things, which is time of day and your setup. That's what's going to really create the setup. That's what makes the setup actually more reliable. Let's put it that way. But I'll just show you here. As you see. Here I get filled at 602 and a quarter right here, and we get the swing high here. We get into that imbalance, and we are pretty much almost testing this also low, but I didn't need any of that. I was already in it, and then price held. So why am I taking this trade to? So to make trading more simple for yourself, do you have time of day in the picture? Do you have a setup that's logical, which is in my case, I had 4 drives here, and I've got bullish, I've got divergences happening. Again, I'm not saying I rely on this, but I mean, on the 1 minute to 30 second, this indicator is really good. And again, if I didn't have this, I would have still considered this as a raid and as liquidity here to be taken, plus inefficiency, which in this case, I've got the 15 minute highlighted, that imbalance right there. I knew, so, and as you understand that when we raided here, I'm not just talking about the raid of recent price action. I'm talking about the raid of yesterday's low. So that is also framing this whole setup. We know we're going to get some movement back up. And sure enough, look at this. Look at the price comes up here, right? Which would be here. Okay. And that's just drive 1, drive 2, drive 3. Now I knew this level was going to get targeted, but here's the thing. I don't need to be right. I can take profit whenever I want. You can partial, you can do whatever the hell you want. But in my case, I'm not interested in being right. I'm interested in being profitable. So I'm okay with shutting down this trade right here. Now, the reason why I shut down this trade is, number one, I've got a projection here of from this low to this high and projecting up and getting into this area is where I was looking for, right? This is my not guaranteed, but this is my minimum target, which is my -1 standard deviation from here. I have my imbalance here that I wanted to seal, right? And I was hoping that we would just run up on this run here, but it didn't. And here is where I got worried. This is where it's okay to jump ship, take profit, and still be right. So in that sense, drive 1, drive 2, drive 3. You see it becomes bear here. I've watched this a million times, so I understood that there was a risk of it failing. Now, when I get this movement down here, even if the indicator wasn't here, the price action comes down, breaks that low. So sweep, break, retrace. This is a problematic area if it might be a sell area. This ended up being a sell. We get the imbalance here. After a break, we come up, we get into that up candle there, and that's a sell. So and the indicator is also showing that we've reached under here. We've came back up. Now, could this price have kept going up? Yes, it could have. But that I'm not willing to find out, nor am I willing to lose any profit on it. So when you got this trade set up, I turned this into a sell. I ended up taking profit and then pushing the sell button. And let me show you how slick I am. Obviously, we're going to be targeting the low because we're bearish. In this scenario, and this previous price action, we're bearish. Okay, so if you don't see that, then, now, are we bullish in the higher time frame? Yes, obviously. But with all this price imbalance, plus the liquidity here, plus I believe it should be bearish. I think we're going to become bearish, if you ask me. But that's another story. But, with this understanding movement of breaking structure, where's structure broken here? For me, it's right here. When you broke this structure right here, you are already a break of structure, right? But you didn't get that retrace back into here. Now, do we come back up into here? Can news do that? Yeah. And can that happen soon? It possibly could. But this is a break of structure. This is a real super break of structure, right? And I don't think the value of stocks and all assets are worth where they are. As far as the interest rates goes, I don't see how they don't still raise them. But at the same time, with them raising them and all this false value, I think the government. Well, let me stop. Let me not go into that. But to be honest with you, you own nothing. They're about to take everybody's shit. If you ask me, I think that's what's going to happen. All your 401k is going to just diminish. I really think that the value of all this is super overvalued. And what they're about to do, remember, we got elections next year. This year, I'm sorry. We're in 24, and we have the CBDC about to pop out. There's a lot of shit that it's about to go crazy, and I feel bad for anyone trading forex, to be honest with you. But I really think they're about to slip that rug from underneath us, man, and we're coming down, yo. I mean, and that's just me. Now, let me go back before I go off tangent real quick. So that was the trade here, right? And as you see, take a look. So nice pattern. Obviously, this is the pattern I even teach in the course. It's a pretty common pattern. It's nothing scientific about it. But once this candle comes in here, this is a sell automatically. So you could have done this a couple ways. So you could have pushed sell immediately, stop loss right here or here, and then once this candle comes down, this 8:52 a.m. candle, and then it pops back up with this next one, comes inside this block right here. That's a nice sell right there. That's what I took, and then stop loss right here. And sure enough, I'm hunting liquidity. So this is to make your life easy. If you haven't learned anything from me, just look where the liquidity is. And 9 times out of 10, it's probably going to take it. And you'll be on the right side of the market, and your psychology will be right instead of you being lost about where is this thing going. Listen, I don't care what it's doing, as far as the daily range goes, which I do, don't get me wrong. But at the end of the day, I'm looking for a couple good trades and I'm out. And if you know how I roll, that's how we do it. 2 to 3 good trades is what I'm looking for. And every single day, minimum 1, maximum 3. And that's just the way I think. So, because obviously, how many setups do you see here? I see a lot. So, anyways, that trade here, and you get an inversion pop up right here. See that? Damn, I hate when it does that. Pops right into this inversion imbalance right here. Pops right in there and seals price, and that's a beautiful entry right there. That should be the real entry, to be honest with you. But I'm confident what I'm doing. I know what I'm doing, and I'm just going for it, right? So, anyways, this trade rushes all the way down, takes out that liquidity. I'm done for the day. So when we get 10 o'clock here. On a 30-second, it was a little bit better for me, but take a look, man. Take a look at I just want to show you this indicator for a second. Sold from here, up here. Came down here, sold, bought from there. Came up here, all right, and then stopped right there. Okay, so watch this. So if you're taking this buy, which I wasn't, but if you were taking this buy and you see that you're kind of flatlined almost, you see that where would you take this trade? You could take it to that piece of liquidity, that swing high right there, right? And you also have that imbalance right there. It's this little one right in between there. God, I hate when they do that. And that's good. You don't need to be holding to take it here. You don't need to be, you got to understand, being profitable is what matters. So then the price comes up, comes down, right? And now this is, look at the indicator now. On the 1 minute, it's not that well. The 30-second was much nicer. But all this, look at this, doesn't reach overbought or oversold, right? Just sitting right in the middle, and all this big price action is moving. But look at the candles. Look how calm and cool the candles are. This is why I was involved early. And take a look here. Look at all these violent candles. Look at all these big candles. I don't want to be a part of this, to be honest with you. Even though there was a great setups here. As you see here, to me, this was just a lower low, a lower high. Here, let me just do it this way. Lower low, lower high. But really, I'm looking at it like, how can I do this for you so it makes sense? Lower low, lower high. Lower low, this low here. See how it comes down, comes up, and then this spikes down, comes up, and then spikes down again, right? So to me, this is like the real lower high, and that's the lower low. I'm trying to open this up for you so you can see it, so you don't think I'm crazy. But you see how this price action from here, this range comes all the way down to here, and then they come up all the way up here. So I look at it like that's the lower high, that's the lower low. Okay, I don't want to make this video too long, but it'll make more sense this way. So this is how I looked at it, right? You can see that here. You see that? Because of the fact that I understand that, they're going to engineer liquidity here. So when I was trying to take this high here, I was really wanting to come here, but I know that it might not happen. And we're overbought here 3 times, and we're not even hitting it. So with that, as you can see the indicator, it breaks down underneath and then it pops up, and that's that level right there. So this was going to be saved for news, is what I'm trying to say in layman's terms. So I accomplished the minimum of what I wanted to do here, took the sell here, and done. But look what happens. This price action right here. Let me go to a 30-second. I know some of you don't like 30-second. But it's just much easier to see for me. And to be honest, you don't need it. You don't really need it, but, you'll see here that we came down here. This is 9:30, the 9:30 candle right here. All right. And we pop up, one more rate down. We come up, we shift right here, this shift right here. So this is a swing high right here and this high, right? Comes right back into this inversion imbalance right there. Yeah, it wasn't a 30-second. I got it highlighted too. See that? So this inversion imbalance here with this imbalance here, price comes down, all right, respects it. That was a nice buy to come up and get to that liquidity. Coincidence that it comes right to that sell? No, it's not. So you got these equal highs here. You see how they're engineering liquidity. They brought the price back down. They got into this last down candle right here, all right, on the 30-second. I'm gonna go to 1 minute. Maybe, yeah, we'll just do that. But falling short of that right there. But that's the shift here and coming up and then retracing and one more punch up. So look how they gently come up right there to get to those equal highs, which was from 6:46 a.m. Eastern time and this 6:58. These highs right here. This is where people, if you're going to break this low here, you break it here, you retrace. This is the idea of support resistance, or resistance, I should say, or the last trade you can take before you come down here. This was a pretty easy trade as far as you having equal highs there, right? So that's the point of me saying that, is because at the 10 o'clock, we had news at 10, they shot up and gently took them out. See? So this is what I was trying to do on this trade. Anyways, after that has been done, comes down, shoots down here, comes back up, gets back into this wick right here. 50% of it, look at the bodies, not even close to it, respecting. Boom. They have built that liquidity there. Their whole intention was to come down to this daily imbalance that I mentioned, to get that balanced, right? And underneath that, after highlighting this daily imbalance, you'll see that you'll also have that piece of liquidity there from December 13th, the low, which was when I made the last video, actually. So when we were coming down, we were taking out that liquidity. Can I zoom out? Yeah, I can. On this 1 hour, you can see here, right there. Look to your right. Oh, well, duh. You can see it here. You can see that we punched right for it, right there. Right when we breached this level, that means we just took out that liquidity on the 13th and we're getting in that daily imbalance. So you have to have your narrative and your framework, right? But all of these moves were so easy to catch. In here, I'm not fucking with them. But the rest of the day was just so easy. I couldn't believe how easy it was. Now, as you see here, we got bearish activity on the indicator, but it's literally like not even on the overbought. So anyways, you could have been a participant if you were confident. And after understanding that this took out that liquidity, and then when it popped back up, you understood that 50% was being protected, and that this old liquidity pool right here was used as a resistance as well. And then when you got this bearish candle down, I mean, you could have pushed it in here, but I like to get a bearish candle. Bearish candle comes down, and then I like a retrace back up into that block right there. You see that? Beautiful. And then sells off all the way completely. Now, look what happens here. I'm just kind of trying to move it over on a 1 minute. How long have I been doing this? Damn. I got to be done. But price comes down here. All right. Now, this is where you'll lose a lot of money. You're trying to catch this buy. And, okay, price came down here on the indicator, right? And you'll see that it bounced here. Now, I don't like these. All right. Sometimes I'll take them, and this would have been a good, even if you caught this buy and you came up to here, taking this from here to here into this imbalance right here, that's a minimum anyway. And this was, I mean, I'm using 4 contracts when I'm trading, and honestly, these moves are like $2,000 each. These little ones. So, you know, that's good money. I mean, you don't need to catch all this shit, yo. Like, you don't need it. You need small moves if you obviously have a better account or, you know, better leverage. But anyways, then you get this then you get another raid, which is what I'm looking for. I'm looking for the upset, right? You think that's the upset? No, they come down one more time and engineer liquidity here. But look up here. I want you to see, even if you have nothing to the right of the chart, look at this. Look at all this imbalance of price here, especially here and this little pocket right here. I was like, yo, we're coming for this bitch. I know we are. This little ass imbalance, and you'll see where we take it. But anyways, make a long story short, we get a raid here. We get a bullish divergence here. And that's a beautiful buy right there. Pops all the way up right here. Gets into this imbalance, wipes that out, and into this block right here. I don't even have to draw it. You should be able to see all this, right? And then after that, look where it hits. Hits the overbought area. Look at that. Pokes up here. Where does it come? Shoots all the way down. Even if you just took it from here to here, that's great points. That's great money. And where, even if you didn't have this indicator, where would you have took it? Well, piece of liquidity here. Upset somebody who was buying, right? And then obviously it does 3 drives down. 1, 2, 3. See that? So, you know, these are the little framework ideas that you can use to take your trades. You minimize let's put it this way. You maximize your probability and your hit rate. You know, and I'm not just taking random shit. I mean, these are setups that are like constant. Look at today was gorgeous. I'm telling you. And then, all right, doesn't break this low. So that's a higher low, right? And then shoots up, right? Comes right up above that piece of liquidity. See that? Now, once we're up here, take a look here. You see this little overbought area right here? See this little 3 pattern right here? Look at this right here. Does this look like it's overbought to you? No. That's not an external range, it's internal. So when I see that, again, I know how to use this indicator really well, but take a look, pops up again. I'm waiting for something like that. Pops up. Now we took a piece of external liquidity, right? So that's a more meaningful move, right? And then where does it go? Comes all the way down. Boom. Now we have that 2 o'clock news embargo with bullshit news. And they push the price down. They wipe out that liquidity. Now they've inched closer down here into that daily imbalance, right? And then from there, I mean, I saw this so beautifully. I was like, man, just take it. You're gonna just kill it. But I didn't bother. Patience is the new me. You know, I mean, I'm not saying I didn't have that last year or anything, but I really have it right now. It's like, it's something you feel, and you know that these moves are going to happen every day. You know that if you just wait for a better confirmation situation and if you take it, you're going to make thousands of dollars. And it's just like, that's just like the underlining, and you trust this process, and I'm telling you, your game will change. But you can see the indicator here, rushing down. I don't know why it does that. You see that? How it's oversold there? Pokes right there. Boom. If you caught this from here to here, great money. Retraces all the way back right into this down candle, about 50%. Comes a little bit lower. Fine. And then rushes up. Where does it rush up to? Fucking so funny. And when it happened, I was like, I knew it. But rushed all the way up to here. Take out this liquidity here. Right here. And look where it gets to the left. Look at that imbalance. That little, you can see that, right? Look at that little imbalance. Okay. I'm going to draw it anyway. All right. I need to be done. I really wanted to come back and do this video. But let me do it this way. All right. Let me just kind of fix this now. Look at that. Look at that. Sick, man. So, got right into there, right? Look at the high of that. Look at the high of this candle here, up there. Look at the high up here. The high here is 16,628 and 3/4. The low of this candle is 16,628 and a half. So we miss it. Oh no, yeah. So we purge it by a quarter. We purge it by a tick. All right, literally, and that's what you want to see. After it hit that, look where we are in this indicator. We're on the overbought area, right? Look at that. Smacked it. Now, some might say, oh, I don't trust that. I want to see it more overbought. Okay, but if you didn't have this indicator, you know this is overbought, because look how we, not only did we take out external liquidity right here. I mean, yes, that's external liquidity. Yes, I get it. But this is not a no bitch ass level. I mean, this is a serious level right here. It's high. We just rushed for it, right? And we just smacked that level. All right. So, I don't need the indicator to tell me that. I'm just showing you that it's, it's, some people will frown upon it, but I think it's cool, man. I mean, it really does work. It's not like it doesn't work. So I'm not going to, but the point of this is that as it came down and retraced back, even if you took this sell from here and it came back down, yes, it ripped back up, but you could have took this sell into this imbalance, plus with this right here, you see this little bounce right here off that liquidity, that previous high right there. We rushed right through it. You could have took the profit from here to here, just to here. If you look at the 15-minute, that was sitting right here, I believe. Yep, this candle came down into this down. I'm on the 15-minute now. This down candle with this wick. Look at 50% of it. You could have. There's many ways you can trade and do your entries and exits. Right, more exits is what I'm talking about. But and you could have took this profit and been done for the day. This alone here is a couple grand. You know what I'm saying? But price shoots back up, right? And that's a lower high here. Shoots up. Look how it tests. Look how it tests the bottom of that little ass gap. This little fucking gap that we're talking about. Look at that shit. Beautiful. And a balanced price. Now, this would have been another sell, but if you, as it was rushing up, you're like, oh man, it's going to take it out. But guess what? It didn't. And where did it go? Came all the way down, dude. Took out that liquidity there. Almost came to 50% of this daily imbalance. Look at the bull signal here. Now, here you would see, God, that sucks. You see here, you get the 3 bulls here. Now, you could, 4 drives down. You could have took this trade because, number one, it was sitting inside this wick and this down candle. But, and if you took this, if you're trying to catch it to get up here, you're foolish. But I wouldn't do that. Where would you take this? At minimum, at this up candle. All right, minimum at this up candle here, or you got also the high of this daily imbalance. And nice shoot right there. Boom, take the profit, yo. Take the profit. But you see as it struggles here on the indicator, this is the reason why I would have definitely took it. And number 2, I wouldn't have been excited about it, because once it breaks below the 50, it's like, yeah, I'm not messing with this, right? So it's rushing down. And the reason why I don't like this trade is because of the fact that it's too close for comfort to this liquidity, okay? At this stage of the day and what's going on, you feel me? And it's the power hour, which is now 3 o'clock. So that's another reason why I would have sold here at the 3 o'clock power hour, hunting this liquidity there. Time is a factor. And then you see here, we bounce from here. And then it closes right here. So this is where we are. So let me kind of real quick try to go into S&P. As you see S&P, they have not taken out that. Oh, they did take out that low. Yeah, that's right. They took out that low finally. But they have all this price action to still balance. So I still think that we're coming down here. And let's go to Dow real quick. And same scenario, but they have not taken out that low either. So I know that we're rushing down. We're probably rushing down for that low. Plus this, I mean, this is the main objective for until it's met. There's nothing else to even discuss. This is the big eyesore. I don't have to draw it. You can see it here. Liquidity, perfect target. We'll see what happens, but I'll be honest with you guys. Let me take a look at dollar. I was mentioning dollar taking out that piece of liquidity right there. We ended up doing that. I made the video here, and then it dropped, and it came right for it, bounced here, and then we came down, and now we got a nice bounce here. So I'm expecting a little bit of a run on dollar. You see we have this gap right here. I mean, I can draw it, but you can see that. But this gap of price right here. We're almost there. I definitely think that we're still coming up with dollar, and we've came down and we've taken out that liquidity I mentioned, and we did not take out that piece right there. But if we're gonna obviously go up more with our futures or indices, then we should see dollar, roll off from here, and then come down to take out these lows. If we are coming down, and that means dollar should be coming up. I should see dollar coming up. I do like these equal highs here and here. And we'll see what happens. But that's what I'm expecting. And we also had a divergence here as a higher low for Dow, taking that nice buy up. We had raids here and here. So, and then this was also a divergence too, by the way. I don't think I drew it though. But once this raided here and they didn't raid these lows, that was also pushing us up right there. And then also at the 10 a.m. when we popped up to take out that liquidity, they had lower highs and it pushed them down. So, you also had, well, I won't get into that. But yeah, I think that's good enough here. Damn, 40 minutes. I'm sorry I made it this long. But I'll be honest with you guys. I really think that we coming down here. So I got this big ass gap right here, right? And then this I think this is getting attacked. This higher low here is getting attacked. If I go to a week chart, you might have already got off the video. But I like this area. I don't care what anybody says, yo. I love this area. So this area here with that liquidity, I think we're coming right for it. Because and I will end with this also, is that we're supposed, in a normal world, let's just say we're in a normal world and we're expecting normal bullish activity with the rest of this year. It's supposed to do this. Let's just put it this way. It's supposed to do this. Okay? This is what we're supposed to do. All right? I don't see that happening. I really don't see that happening. I really don't see it happening. I don't see how we could be up here. I'm surprised we got above this high. So honestly, if you ask me, I think we're coming down. And that's all I'm going to fucking do. I'll just leave it at that. But we'll see. All right, you guys take care and God bless.